Welcome back, episode 12 of Making Sense of Your Money. As you can tell, Elizabeth is still out on well-earned maternity leave. Today we have Tom Scarfo with us. He's the Vice President of Business Development and Distribution at VanBridge, our insurance partner. So a little background on Tom. He's got 17 years experience in the business, and he's only been on the insurance side. So it's really helpful to us to have somebody that kind of knows the landscape of insurance when it comes to life insurance, disability insurance, long-term care insurance. And today we're going to focus on that long-term care insurance side of things because we've really seen a lot of changes in that industry since, really in the last 5 to 10 years, there's been a lot of changes in that. So I'm going to throw a couple softball questions at you, Tom, in the beginning, and then we'll get down into some of the nitty gritty. So again, thanks for being here. So starting off, what is long-term care? What is long-term care insurance?
Excellent. First and foremost, Jeff, thank you for having me on. I really appreciate the opportunity. But getting right into it, long-term care insurance is essentially when a client has a need for one or more services. And it's typically triggered by a client not being able to perform what are called ADLs, activities of daily living. And so the basic premise that goes along with long-term care, and going back years ago, you did mention the landscape has changed, which is true. Everyone used to associate long-term care with just nursing home care. That's very, very far from the truth today. If a client, and irregardless of age, if a client gets injured and they can't perform those 2 of 6 ADLs, which are going to be getting dressed, going to the bathroom, transferring in and out of bed, getting up and down flights of stairs, or another big trigger is a cognitive impairment like Alzheimer's, dementia, Parkinson's, a cognitive or degenerative type disability. So long-term care provides services to assist that individual that cannot perform the 2 of 6 ADLs. And we'll talk about how it comes to market and how it looked previous to where it is today.
Sure. Thank you. So what types of clients are you seeing where they have the biggest need for purchasing long-term care?
So that's a great question. And I speak to many clients of different ages, and the ideal candidate is I want to say maybe a pre-retiree or a client that's just about to retire. And typically the client can have, a retirement plan in place with retirement assets, maybe some life insurance, maybe some annuities in their assets or in their portfolio. But a lot of times their concern is, what if I get sick, once I go into retirement? Well, I don't want to have to put my retirement assets in jeopardy. That's the client I talk to pretty much every single day. We're also entertaining clients at younger ages, 50 and below for long-term care, because it's really been a mention in the industry as far as clients that can get it really as young as 40.
Oh, wow. So, when we're talking about long-term care, I'm sure that many of the people watching this are thinking of, your traditional long-term care insurance. Can you kind of, look at the differences or talk about the differences of why you should buy either a traditional long-term care policy or a life insurance policy with a long-term care rider?
Yeah, absolutely. So the landscape going back 10, 15 years ago, the only type of policy you could buy if you wanted long-term care was called a standalone long-term care policy. And it offered typically 4 coverages. It offered in-home care, nursing home care, skilled care, and adult services, they call it, which is like our companions and homemakers type, have someone help with doctor's appointments and errands and things like that. So it was a very popular policy 10, 15, 20 years ago. And it served one purpose. And it's if the client got injured or had those 2 of 6 ADLs trigger, they would be able to access those services. Now, the benefit of that long-term care policy is it had a stipulation that would not allow the company to cancel the coverage based on conditions that arose or pre-existing conditions. Once the client had the policy, they're locked in. Now, fast forward, 10, 15 years to where we are today, the policies, unfortunately, they're not canceled, but the premiums have gone up quite a bit on those. So, and that's based on several different factors. Most importantly, the cost of medical care, the advances in technology, all those cost money to provide those services. I think the biggest one that we don't talk about all that often is the lack of providers that are doing the traditional long-term care. And then the one caveat to that traditional policy was, if my client buys the long-term care policy and they never get sick, they never need the benefit, which we hope they don't, and they pass away without the need for care, the policy goes away. Nothing passes to their family, to their estate, to their beneficiaries. The policy just expires at that point. So in looking at policies like this, you've got a long-term care benefit, you've got a guarantee that it's never going to go away, but no price rate lock. And the uncertainty, if you don't use it, it's gone. It's really a use it or lose it proposition. Fast forward to where we are today, and this is going back just 5 years. Insurance companies have brought this long-term care benefit to market in a few different ways. The first way is on a life insurance policy, and they've used it as a rider. So you could buy a life insurance policy that'll pass to your estate or your beneficiary at your death, but they've structured it in a way to where the client can now borrow against that death benefit for long-term care services. That's one way. Another way that companies have brought it to market is in the type of product called a hybrid product. It can be an insurance product or an annuity product. The most popular ones are life insurance products, and they're structured in a sense where it's on a life insurance chassis, but provides the long-term care benefit. Now, with these hybrid products, they typically, there's some stipulations on how they can be funded. Typically, it's a one-time deposit or a premium payment up to 10 years. It's not like traditional life where you pay for lifetime. These are especially popular when clients have those investment accounts or retirement accounts where they're able to move money from one account to another. So for example, let's say you've got a client with $1 million in retirement assets, and they don't have any long-term care. They don't want the use it or lose it policy. So we'd put them in a hybrid type policy. And what we would do is we would liquidate a portion of that $1 million portfolio. Let's call it 10%. So we take 100,000 of that asset. We're not taking the entire asset. We're going to move it over and do a rollover into this hybrid policy where we pay it one time and it's guaranteed for life on the death benefit and the long-term care. In doing that, we're eliminating a bunch of different concerns. Number one, the use it or lose it proposition is out the window, right? So if I buy this hybrid policy and I don't use the long-term care, well, that's life insurance that'll pass tax-free, keep in mind, to my beneficiaries. If I need the long-term care, typically it's leveraging 1.5 to 2 times, depending on my client's age. It's going to leverage around 2.5 times the investment. So, for example, day one, transferring $100,000 into a policy for maybe a 63-year-old male or female might give them $250 day one in coverage. So what that's doing, Jeff, is it's really, and I explain this, to my clients every day, it's protecting the retirement asset is what it's doing. So we've got a long-term care policy that we can liquidate in the event it's needed, and we're preserving the remainder of the retirement assets.
So when we're talking about the long-term care rider in this policy, in a hybrid policy, would you use it the same way that you would use that traditional LTC, type policy?
Yes, absolutely. So the triggers again are identical with the LTC rider on the life policy and the hybrid policy or the standalone. They all, the LTC umbrella, basically, it's the same trigger. Again, that trigger is 2 of 6 activities of daily living. So let's say we buy the life insurance policy with a long-term care rider on it. And the client can really structure this any way they see fit for their budget. Doesn't have to be the single premium deposit. It can be a lifetime payment, can be made in monthly installments. But let's say, hypothetically, Jeff, we've got a client that wants to buy a a $250,000 life insurance policy. And they're able to put on a rider. And the way the rider works is it's in increments of 2%. So it's 2 or 4%. So your client would buy the $250,000 life insurance policy, and they would attach a 2 or a 4% rider. For this example, we're going to take a 63-year-old male buying a 250 policy, attaching a 4% rider. So as soon as he makes the first premium payment, client has two pools of money, or two buckets of money, I like to call it. 250 if they were to pass away. And then that 250 is also there for long-term care. So again, going back to the trigger, the 2 of 6 ADLs or cognitive impairment, they can access that pool of money. Now, the way life insurance is filed with the IRS, benefits that are a death benefit pass tax-free. Because we're endorsing a rider for long-term care onto the death benefit, now that death benefit and long-term care benefit are tax-free.
Oh, wow. So for example here, this is kind of like the have your cake and eat it too type solution, where it's, hey, I've looked at long-term care. What if I don't ever need it? I don't want to, just throw that money out the window. You can have something like this where, yes, it will cover you if you go into long-term care, if you don't ever need it, or you don't need the full, in this example, 250,000, you could spend down a portion of it, and then the death benefit would still pass tax-free, meaning that, you're still able, I just want to make sure that, our listeners are following here. We're able to leverage that money into something that is 100% going to pay out one way or another.
And I like to tell my clients that within these hybrids or life with long-term care policies, there's a guaranteed payout. Okay. It's life insurance first and foremost, but with that endorsement for long-term care rider benefit, the client can reap the benefits while they're alive and if they need the care. So yes, it's going to pay out, whether it pays to a medical facility for the care, an in-home nurse practitioner, or some sort of adult type service, or if it just passes as traditional life insurance death benefit, that will pass along tax-free. So it's really a very, very nice proposition in consideration looking back about the traditional we discussed, where if they never used it, it goes away. That's certainly not the case with a hybrid or a life with long-term care rider.
Is there a situation where your typical or old school long-term care insurance policy would fit for someone better than, this life insurance LTC type hybrid policy?
Yeah, I mean, it could be certainly used in several different scenarios. What I like to tell my customers is this: there's really no right or wrong solution for every customer. And that's kind of the beauty in it, is we can, with long-term care, whether it's a traditional, a hybrid, or a life with long-term care rider, we can customize a plan that fits your client's needs. So for example, let's say you have a client that, has a situation where they are adamant about not going into a home or not going, leaving their home for care. We would look at something like a long-term care rider or a long-term care standalone, because it offers the in-home services, the adult companion services. That's going to be a big benefit for them, meaning if they need that assistance, they could have it come right to their doorstep. So a client that is in that situation, now let's say, God forbid that their condition progresses. Well, that traditional long-term care, it does cover rehabilitation and nursing home care as well. So now it's really the best of both worlds. They can have the care in their home when they want it, and the care in a facility when it's needed.
Sure. That makes a ton of sense. So just so everybody knows out there, where Tom and I have been seeing, where it makes a lot of sense is if a client has an old life insurance policy that maybe they're paying a little bit of premium and they've built up a ton of cash value, you're able to take that cash and fund one of these hybrid life insurance / LTC rider policies, where now you're maybe able to increase your death benefit on that policy and add an LTC rider on top of that. So this is something that you want to make sure that you're keeping up to date with your insurances. I know that Many of our clients had bought insurance before we ever got to them. So make sure that, whether it's working with us or another agent, that who you work with knows what you have, everywhere, because, there might be something better for you that just didn't exist when you bought that policy, in the first place. So, if you do have further questions on this, feel free to reach out to me. I can always have Tom run some quotes for you or analyze the current insurance that you have. Please subscribe to our channel. If you do have questions, reach out to me, schedule an appointment through my Calendly link. And as always, go Bills.
Thanks.